Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. And man, it's slow. You know what's not slow is we've seen a rally in equities, and that's like I said earlier, it's Monday. It's Mutual Fund Monday, baby. Mutual Fund Monday, allows for typically, a bit of a squeeze in the market, and it's kind of what we're seeing right now. We're just seeing a continued squeeze up here, and I think it's probably going to persist, and for a little bit longer, especially until once Europe is gone, and once that happens, you might see a little bit of a reversal as we go into the rest of the week. It's always Monday. Mondays are, tend to squeeze a little bit, and the NASDAQ is really, taking it to the market right now. While we're looking at the NASDAQ, actually, this is the NASDAQ 100. Probably coming right into resistance here very shortly, especially if we're going to continue making lower highs. That means that resistance is probably not too terribly far away. Just, thinking out loud here. 78% retracements coming into play here shortly. Maybe the 88% retracement may hold it, which might be just another 50, 60 points higher. And, if you look around, like, the Dow's up, but it's not up too much. I mean, we're up 70 points, but really not up a whole lot. And the S&P's 1% higher, so the S&P is getting a little bit of a lift, but we're, coming into that 618 retracement. So Irina says, Blake, equities are also slow. It's pretty boring. Yeah, I mean, the whole market's actually quite boring. Look at the lack of response in the Aussie. I mean, we've had almost a 1% rally in the S&P, and the Aussie's barely gone anywhere, right? So this continues to reinforce the idea that the Aussie dollar is building a longer term head and shoulder pattern, because it's becoming less responsive to the upside and more responsive to the downside, right? Kiwi, the Kiwi's gotten a little lift, but look, we're not too far off of where we were at on Friday of last week, as stocks have gone up as well. If you look at the dollar Canadian's actually holding up very, very well, despite the rally that we've seen in risk. So, that's something else to also take into consideration. I picked up some US dollar, Mexican peso, some more dollar pesos down here this morning at 54, 55, 20, 55. And then I sold it when we were above 60. And then, I bought it, I haven't bought it back again, but I still think that the dollar Mexican peso is actually trying to show a reversal around these levels, and we're going to head back up into the channel a little bit later this week. As long as we hold above this 2040 level, we shouldn't sell off too much. But let's take a look at the euro. The euro's actually acted pretty well today. It's one of the currencies that has acted a little bit stronger. But I think it's not only just the euro dollar, it's the euro against other currencies. If you look at like the euro sterling, looks pretty bullish. I know it's come off a little bit, but I think the euro sterling, you have to buy it on dips now. I think any dip back down towards like 85, 90, something like that, it's probably going to be a good place to be long if you're not long already. The Euro Aussie is pushing this descending trend line, which, I think if we can get above here, it's at 154. Let's just call it 154 and a quarter. That's going to be pretty bullish for the Euro Aussie. Euro New Zealand, you can see how it's knocking its head right up against resistance as well. So these euro crosses look pretty good. So it's not just the euro. I know a lot of people look at the euro dollar and they're like, wow, the euro dollar is so strong today. I mean, yeah, it is up, 35, 40 pips and up a lot from the lows, like 50 pips off the lows, but still a pretty tight trading range. And I think it's more of the euro crosses, not so much just the euro. Jason asks if I have any thoughts on the Canadian yen. The Canadian yen, aside from me wussing out big time last week when we were here at the 127% extension and I was short and I took a loss, then I went short again, made not as much as I lost, and then stayed out of it. So aside from me being a wussy, I think it looks dangerous. I think the for longs anyway. I think if you get an opportunity to sell like the Canadian yen, like on an hourly rally, maybe back up to 87 and a quarter, that's not a bad risk reward to be on the short side of that. I don't think, but one of the things about the yen, not just the Canadian yen, but you got to think about the yen pairs just in general. I think you just got to continue to watch yields. I think yields are going to continue to pull back a little bit. And as long as they're pulling back, then I think the Canadian yen, euro yen, and pairs like that might continue to pull back a little bit. But I think ultimately, if yields continue to go up, those yen pairs are going to go higher. And that's coming from somebody who is actually short euro yen right now. So I think you got it. I think those of us that are shorting, these yen pairs just have to be a little bit careful that yields don't start ripping. Because if yields start going up, it could be the catalyst that makes all of them break higher. Right. So just be careful. What else? I think that's pretty much it. I haven't done a whole lot today. You'll notice that if you go over here to where, the live stream from our updates, you'll notice the basic technical updates. I mean, a couple hours ago, I updated a couple charts. I'm not going to update a bunch of charts if nothing's happening. And right now, nothing is really happening. It's a really slow session. And so it's important not to get carried away with trading if you're, just because you're bored or you're looking for something to do. Look for specific levels. Like, one of the things that I like, if you're trading equities, I'll give you a couple ideas. Like, I look at the S&P and I look at last week. So let's go over to the weekly chart of the S&P. Actually, let me pull it up this way. Okay. So here's the weekly candle of last week, right? This is a false breakout as far as I can see. You guys agree with that? False breakout. So if it's a false breakout, that means that you probably want to sell rallies. So because today, intraday, we're rallying back, I think you want to look to sell rallies maybe right at the 618 if you can get it. So a move to, this 3950 level might give you an opportunity to sell some S&P with maybe stops above 3970 or even the all-time highs if you want to, really take on some risk. But you got to do things like that and let the market come to you, especially when it's really slow like this. Let the market come to whatever price you're looking for. And if it gets there, take the trade. And if it doesn't, stand aside. Okay. Especially on slow days like this. All right. And you know what else I realized? I realized this after I filmed the week ahead video and it was already off to editing, is I never even talked about what's happening this week. There isn't a whole lot going on this week. We have, Powell is talking about the CARES Act tomorrow morning. We have like some PMIs in Europe, and actually Powell will be testifying, the next couple of days, but I doubt he's going to talk about give us any ideas about monetary policy moving forward. We have the Euro Summit at the end of the week. It's kind of a slow week, but I want to say this really quick before I let you go, is that when it's slow economic data week and you're like, man, I don't know what's going to actually, move the needle. These are sometimes the weeks that we end up seeing some good movements, when the markets are when you're least expecting it. Let's just put it that way. All right. So anyway, that's pretty much it. I wish there was more to say, and I wish there was more to do, but there isn't. But that doesn't mean that it's going to be this way all week, guys. So take care, have a great one, and I will talk to you shortly. All right. Thanks, everyone. And thank you for your continued support.